Today on the show, American tower to buy Eaton in $1.85 billion Africa push. Standard Bank shareholders vote down climate risk resolution. Plus, Zimbabwe power cuts may deepen as water levels fall at Kariba Dam. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimizi Obi Iwagu. We'll get the show started now with the markets. And the markets in South Africa and Nigeria were in the red zone at intraday today. The JSE index was down 0.52%, while the NSE index was down 0.51%. Egypt is closed for the weekend, but closed negative on Thursday, down 1.40%. Kenya was also negative on Thursday. And in the Middle East, the markets are closed for the weekend. However, on Thursday, Qatar stock market surged to its biggest intraday high in 9 months after a report that Qatar's prime minister will attend an Arab summit in Saudi Arabia, while all major Gulf bosses also rallied, mostly riding on financial stocks. Qatar's index rose 3.43% to hit its sharpest intraday high since August 2018. Banks led the gains, with Qatar National Bank leaping 4.4% and commercial banks soaring 9%. The Abu Dhabi index climbed 2.82%, rising for the fourth straight session. First Abu Dhabi Bank, the United Arab Emirates' largest lender, jumped 4.1% to 14.9 dirhams, while Emirates Telecommunications Group was up 4.5%. Saudi's index was up 1.22% a day after joining MSCI's Emerging Market Index. In Dubai, the index closed 0.79% higher, boosted by financial and real estate shares, with its largest listed developer, Emma Properties, adding 1.4%, and the biggest lender, Emirates MBD, gaining 0.9%. In Europe, stocks opened sharply lower on Friday morning after U.S. President Donald Trump announced plans to impose a 5% tariff on all Mexican imports from June 10, stirring fears of a global recession. Well, while we wait to speak to Orich, let's look at what's happening at the London markets, as banking giant HSBC is set to cut several hundred jobs in its investment banking division by the end of the year, while Russia's Gazprom reported a 44% jump in first quarter net income. Let's bring in my colleague at our London studio, Simon Pusey, to bring us up to speed with the London market. Good afternoon, Simon. Well, is the plan by HSBC to cut several hundred jobs having any major impact on the stock and, of course, the sector index today?
Yeah, I think it probably has had a small impact. Good afternoon. At least 500 people, as you said, at the bank could lose their jobs, but formal numbers have yet to be announced. The cuts are expected to start as soon as mid-June, so just a few weeks away, and to take place over the rest of the year. They come amid sweeping job reductions across the firm and are reportedly part of a wide plan nicknamed Project Oak. Now, shares in HSBC did rise on the news, but they settled back down to 0.3% down this afternoon. And the news may well have added to a number of other factors coming from around the world, which means we are down across the board today, like across the rest of Europe. Looking first at the stock markets and the FTSE All-Share, which is down 0.92%. The FTSE 100 down there by over 1% at minus 1.14%. And the FTSE 250 is also down by 0.99%. Looking at the pound, which has had a terrible month, it is also down. It's down 1.25 to the dollar, down by 0.18% against the euro, and down 0.79% at 108 against the yen.
So what are the comments there concerning President Trump's plans to impose a 5% tariff on all Mexican imports from June 10?
Yeah, lots of analysis of this story here in London. Some people warning that Trump's tariff threats to Mexico are actually going to make it more difficult to reach a trade deal with China, mainly because they see it as damaging the credibility of the US as a negotiating partner. Chinese academics and media have already been pushing this whole narrative that Trump can't be trusted. Others are asking whether the president has actually increased the risk of a global recession, the uncertainty that the US president creates. Well, the US economy and the world economy has spent around a quarter of a century building this, growing this long, complex supply chains. And if those supply chains are at risk, companies will need to rethink their business models. Reshaping supply chains is, of course, an additional and economically unnecessary cost. If investment is cancelled and employment reduced, then the risk of a recession increasingly rises significantly.
Okay, it's the last trading day for the week. Wrap up the week for us and give us an idea of what to expect next week.
Yeah, it's been a quiet week for the sterling against the euro and the dollar, but the currency is still on track for its worst month since May 2017. We also heard news this week that the British housing market has slowed in May, with economists expecting the market to remain flat in the coming months. Annual house price growth slowed to 0.6%, while prices fell by 0.2% month on month. Let's look at next week. We've obviously got President Trump's three-day trip to London, which begins on Monday. This is a proper state visit. The Queen has given him a formal invitation, and reports say it could cost more than £18 million to host the US president. As always, investors and the markets will be watching and reacting to whatever he says closely. Next week also we see the Conservative leadership bid, which starts officially on the 7th of June. That's the Friday. Market volatility is likely to follow the twists and turns of that, with several of the top candidates seeming to favour leaving the EU without a deal, and the markets are incredibly scared about that. Actually, for the month of June, this Brexit-focused Tory leadership battle will be all-consuming, so we'll be looking at that and bringing you the latest from that next week.
All right, thank you, Simon. Enjoy the rest of the weekend.